Have you ever wondered if your bank is keeping secrets from you? Well, you might be onto something. In today's video, we're uncovering the top 9 truths about money that banks would rather keep under wraps. From the sneaky ways your savings are being eroded to the hidden charges you never noticed, we're diving deep into the world of banking secrets. Stay tuned to uncover these startling realities and learn how to outsmart your bank at its own game. Number 1. Losing money to inflation. Hey there, let's start with something that might surprise you. Did you know that the money sitting in your bank account isn't really growing? And that's right. While it feels safe and secure in there, there's a hidden enemy called inflation silently chipping away at its value. Here's the deal. Banks offer you interest on your savings, but this rate is often much lower than the inflation rate. What does this mean for your hard-earned cash? Well, over time, the actual purchasing power of your money decreases. So, if you're not investing or finding ways to grow your savings at a rate that beats inflation, you're essentially losing money. It's like running on a treadmill but slowly moving backward. The bank's cozy safety net might not be as protective as you think. Now, you might be wondering, how does this affect your financial goals? Imagine you're saving for a big purchase, like a car or a dream vacation. With inflation, the cost of these things tends to rise each year. If your savings aren't growing at the same pace or faster, you'll find that what you've saved today might not cover the full cost tomorrow. It's a bit like chasing a moving target. The key takeaway? It's crucial to understand how inflation works and to explore investment options that can help your money grow. Just leaving it in a savings account might not be the best strategy if you want to preserve or enhance your purchasing power. Number 2. Banks earn from card transactions. Moving on to our second truth. Every time you swipe that credit or debit card, guess what? Your bank is making money. It's all about those processing fees. Whether you're buying a coffee or shopping online, banks charge merchants a fee to process the transaction, and often these costs are passed down to you, the customer. It's a hidden way banks earn money, and most of us aren't even aware of it. But here's the interesting part. While these fees might seem small on each transaction, they add up. Think of how many times you use your card in a month. Groceries, gas, dining out, all these little fees contribute to a significant revenue stream for banks. And the catch? You might not see these fees directly, but they can influence the prices you pay. Merchants might increase their prices to cover these costs, which means indirectly, you're paying more. It's like a stealthy little addition to your bill, and before you know it, it's part of your everyday spending. So what can you do about it? Well, being aware is the first step. Understanding that these transactions aren't just convenient, but also a revenue source for banks can help you make more informed choices. Maybe you'll decide to use cash more often for small purchases, or perhaps you'll become more selective about when and where you use your card. It's all about making smart financial decisions with all the facts in hand. Number 3. Your money in the bank is not physical. Did you know that when you deposit money in a bank, it doesn't just sit there in a vault? In reality, banks use your deposits to fund loans and other financial ventures. This is based on a concept called fractional reserve banking, meaning only a fraction of all deposits is kept on hand physically. The rest is working, being lent out to other customers, invested, or used in various financial operations. This system works because not everyone withdraws their money at the same time. However, it's important to understand that the physical cash you deposit becomes a number in an account, part of a much larger dynamic financial system where your money is actually in motion. Number 4. Bankers are not your friends. Here's a slightly uncomfortable truth. Your friendly bank representative might have interests that don't perfectly align with yours. Bank employees, as pleasant as they are, often have sales targets to meet. This might lead them to push certain financial products or services that might not be the best fit for your needs. It's essential to remember that their advice, while helpful, might also be influenced by their targets or the bank's products. Always do your own research and seek independent financial advice if you're making significant financial decisions. Number 5. Foreign transaction fees. Traveling abroad or shopping from international websites? Watch out for foreign transaction fees. Banks often charge extra for transactions made in a different country. These fees can be a flat rate or a percentage of the transaction amount, and they can add up without you even realizing it. It's crucial to be aware of these fees and consider them when planning your travel budget or making purchases in foreign currencies. Some credit cards offer no foreign transaction fees, which might be a better option if you're a frequent traveler or an international shopper. Number 6. Always check your accounts. Regularly checking your bank statements is more important than you might think. It's the best way to catch any unauthorized charges, errors, or hidden fees. Sometimes small charges go unnoticed, and these could be signs of errors or even fraudulent activity. By keeping a close eye on your account activity, you can spot issues early and address them with your bank. This habit also helps you stay on top of your financial health and budgeting. Number 7. You're being watched. Banks monitor your financial transactions, and they're not just being nosy. They're legally required to report suspicious activities or large transactions to financial authorities like the IRS. This surveillance is part of measures against money laundering and other financial crimes. While it can feel a bit intrusive, it's important to understand that these measures are there for broader financial security and compliance with regulations. Number 8. Minimum balance fees and account charges. Here's something many aren't aware of until it hits their account: minimum balance fees and other account charges. Banks often have a minimum balance requirement for your account. Fall below it, and you might get hit with a fee. Additionally, there are maintenance fees, withdrawal limits, and charges for additional services that can slowly eat into your savings. These fees vary widely among banks and account types, and they can significantly impact your financial health if not managed properly. It's crucial to read the fine print when opening an account and regularly review your account to understand the fees you're being charged. Sometimes, switching to an account with lower fees or maintaining the minimum balance can save you a considerable amount of money in the long run. Number 9. The power of compound interest works both ways. Last but not least, let's talk about compound interest, a powerful concept that can work for or against you. When you're saving or investing, compound interest, earning interest on interest, can significantly grow your wealth over time. However, the same principle applies to your debts. If you have loans or credit card debts, compound interest can cause what you owe to balloon if not managed properly. This is why it's often advised to pay off high-interest debts as quickly as possible. On the flip side, understanding and utilizing the power of compounding through savings and investments can be a game changer for your financial future. It's all about being on the right side of compounding. And that's a wrap on the banking secrets you were never supposed to know. Remember, knowledge is power, especially when it comes to your money. Thanks for watching, and don't forget to like, share, and subscribe for more insightful content.